All right, let's dive right into the stock market technical analysis trade ideas. We're going to look at various charts. I want to start off with triple Qs, and then I've got individual trades, individual charts to look at. If you guys are finding value in the content, drop me a thumbs up. If you're interested in getting additional trade setups, trade ideas, charts, market analysis, private member group, link in the description below. I just charge $5 a month, and you can cancel anytime you want. So feel free to check it out, and let's dive right into it. Triple Qs. Inflation obviously came out today. The CPI reading came out hot. So far, the market's been kind of buying the dip, but I do want to show really what I'm seeing as of right now. So I'll start off with triple Qs just because it's chocked full of the big market leaders, the tech stocks. And on triple Qs, a couple of things. I have to go down to the hourly chart to show it, but on the hourly chart, we've had kind of this series of rips and dips basically. So you can see we rally up. There's all these rips and dips. A lot of the dips have been coming in the form of gap downs, and the latest rip has been right here. You can see support, some reactions, and then we gap down. We're back testing that right now. Okay, that is actually being back tested on this rally. So that's resistance. I think it's objective to short at the current levels here at resistance for that next, move lower. Maybe that's in a gap down tomorrow. I don't know. But in general, objective to short at resistance. If I go down to the 15-minute chart, just to kind of give you a little bit more a cleaner look, you can see here, there's your supports, and hit resistance, and we've basically just been hitting resistance and testing resistance from below. So that's objective to short. Now, obviously, if they recover it, and this little dip was just a little false breakdown, and they recover that, then you're probably going to have a short covering rally, and you're going to have an impulsive move up. But until then, it is resistance, and we have to treat it as such. One of the reasons why I feel relatively comfortable in the fact that this rally into resistance is going to get sold into is the interest rates, the 10-year. Here's the TNX. Let me go to the daily. On the daily chart, so again, this is your 10-year treasury. You can see this is when the Fed started cutting rates back in September of 2024. And you've got support, multiple reactions. There's another reaction. We did break that support here, and we've recovered it today. Big move up in interest rates today. Rising interest rates are not bullish for the stock market. They're not bullish for, risk assets. And as of today, this trend line, which is an uptrend, all right, has been recovered. So this is a false breakdown until proven otherwise. Okay. Now, if they, we still have a few more trading hours. So if the sellers come in and we end up closing basically right here at the trend line, then you can say that this is just a back test. All right. And maybe we have a breakdown and then a back test, and then interest rates can continue to go lower. That can happen. So watch that TNX chart. This is your 10-year interest rate, 10-year treasury interest rate. But as of right now, it's pretty far above there. And to me, that looks like a false breakdown or a bear trap, essentially. So if you see rates continuing to rise, and again, they don't this is a pretty good size move in interest rates. So I could see, rates kind of coming back down maybe in the next couple of days and hitting the trend line. But in general, if the trend line has been recovered, then regardless of whether you pull back and hit the trend line over the next few days, you should see rates continue to hold and move higher. And so the market should pay attention to that, maybe not today, but in the near future, if rates continue to move up, the market should actually pay attention, and you'll see stocks starting to come down. You look at home builders, they're down today. That makes sense. XHB, they're down because interest rates are up sizably. So yeah, just things to look at on that one. Market leaders, NVIDIA is the most important to me right now, just given that this is the momentum in the market, and just due to the AI thing. But again, if interest rates rise, this is going to be affected as well. That that zone of resistance that I talked about, we're still basically below it. You can see it was right there, but it was in here from here to here. But you've got, this is that gap down on the deep seek gap down. So we're still below that resistance. And then so I'm still looking for this big kind of sideways action to act as a wall of selling. I talked about that when we got that gap down, that if we rallied into resistance, all the people that were long here are either breaking even or coming close to breaking even, depending on if you're buying at support or not. And that creates liquidity. That creates a wall of sellers, of people that say, you know what, I'm happy to get close to getting my money back or breaking even. I want to get out of this trade. And so it creates volume in sellers. So looking for that. Now, if they recover this and it comes back into the range, you're probably going to go to the top of the range and probably pop it. So nothing's really changed on that front today. Just more, we're just testing that. If you look at the hourly chart, you can see, kind of a little uptrend line here on the hourly. All right, clean, pretty clean. And we gap down and, they're just kind of treading water right now. So I'm looking for selling to show up maybe into the close. The way I can kind of see it, they bid it up in the morning, float it for a few hours, and then dump it into the close. That's kind of what the chart's telling me it's likely going to do. So I'd be looking for NVIDIA to maybe head down to about 127.40 by the end of the day. That's looks like it's there. If not, maybe you go back test. That's possible, but with interest rates where they're at, I just don't see the market rallying too much. Unless the interest rates start to come in a bunch, then I do think the sellers are going to say, hey, rates haven't been falling. They rose substantially today, and they're not easing off that much. So we need to, take risk off. Okay, Tesla, a little relief rally today. It's sold off quite a bit over the last few days. Resistance looks to be about 360.57. Rising interest rates are negative for Tesla. They sell cars, mostly financed. So that, to make cars more expensive, to borrow the money is not good for Tesla. So again, those play a key factor. But, we could bounce up to this resistance and then should head lower from there. Google at support. All right, there's support, and we're kind of at support now. So that has to go in order for the next sell signal there. You could obviously see a bounce here on Google. It's not a short. It's not a short when you're at support. Okay, so you could bounce here and then maybe break down in the future. Maybe not. Apple rallying a little bit. No technical change on that one. No technical change on Microsoft. Kind of just treading water at the lows, but no technical change. Meta, no real technical change either. You can see we've just been kind of floating higher on decreasing volume. Look at the volume dropping off. So that's volume divergence. And you also have, if you look at like the hourly, you've got negative divergence on the hourly chart. So these are new, each little tick higher is diverging, continuing to diverge higher. This is likely going to come. You're probably going to get a gap down and just trap all of this floaty action and then just, kind of unwind pretty quickly. But that only happens when it does. So until then, price continues to grind higher. So it's not an all-in short, of course, on that one. I've initiated a starter short. It's down slightly, but again, not much. And I'm just waiting for kind of that next sell signal, which would be an impulsive rejection, either a gap down or a big red candle or something. And Amazon is basically, kind of the middle of the range. You got this channel here, and you're just like in the middle. So that's no man's land. That's, you're not at support or resistance, so it's kind of like a no trade. I mean, I would assume if the market's going to come down, it's going to come down to the support of the channel, but it could bounce up. Again, no trade there. It's just 50-50 on that one. I did add AVGO at the request of a subscriber. They are a large, they're a large cap tech, so it did make sense. This one still has this island cluster top pattern. So you gap up, create the island cluster, and then you gap down, and that actually creates what the island is. So now, you basically are trading into resistance, kind of that gap. You're trading up here. You can go up to the top of the gap. You just don't want to see a daily close above the former highs, 249.50-ish, 240.51, but right in there. Daily close above that, and that negates this as an island cluster, and then you would not want to trade that as if it's the top. You'd want to stop out if you're short. However, this until that happens, this remains a topping pattern for the next trend lower. So it still is a short. I'm not short this one specifically, but it is an objective short, even kind of at current levels. You just, again, you want to stop out above on a daily close above. And again, I just talk about the possibility of what could happen. Not the probability. Probability tells me, given the pattern, that we're actually, and you have negative divergence there as well. That's a divergent high. Given the pattern, we're actually going to do this. That's the probability. The possibility is, infinite, essentially. It can do anything. But you could trade up here and get a daily close above. So that's it. We trade probabilities, not possibilities, and that is kind of the what I'm thinking we do is head down to this support line on Broadcom ABGO. And from where we're at right now, it's a drop of about. Oh, let me grab the right tool. That's a drop of about 20% for that to be hit. So I like that as a trade setup for sure. Home built. This is Homes ZG Zillow, and you can see how rising interest rates which is what we've had, is starting to affect the home sales. Now, this one reported earnings, big gap down here. We'll see how this closes. I've got an uptrend line here, and I kind of marked it on these just above because the daily close was like right in there. And today we gap down and it's back testing. We'll see if it actually can recover. That's yet to be determined because the day's not over. And so, yeah, if it can't, then I would suspect that this is a breakdown, a big sell signal, and a back test, and then it will roll over. Okay, so keep an eye on that one. Wheat coming in a little bit. We've got support right about there at $5. That's support, and that's it. We're kind of coming in. Maybe we're going to back test it, maybe not. But that's where the buyer should be at. So we'll look for wheat to bounce off of that. Now, if it doesn't, it breaks down, then you've got a false breakout, and you're probably going to head lower. So that's the possibility. Probability says we hold support at $5 and then rally into the 200, probably chop around for a little bit, but I think it's going to take it out. We've already tested it a couple times, so that's what I've got on wheat. And then the wheat the wheat input, like MOS, this one's starting to kind of break down. We'll see where we close the day. Earnings also coming out soon, so next here in the next couple weeks. This one, MOS, you've got this big bullish falling wedge. You have a breakout, and you have a back test. As of right now, it's dipped below, and we're back below there. So you definitely, if you've gone long, I don't think you want to add to longs until it recovers that trend line. There's also this potential trend line. We have one reaction here, one right there, and we're sitting right on that third one. So this should hold right in this area, and then probably catch a bid maybe into the close. Otherwise, obviously it could go lower. This could be a false breakout. All right, that's possible. So we'll keep an eye on that one. It's got bullish divergence, so yeah, it could go make another low and put in a new divergent low, and then maybe rally on earnings. That's possible. I'm kind of leaning towards the buyers step in right around current levels, keep it kind of right within this trend line, and then on earnings here in the next couple weeks, you get that next move higher. That's the way I'm kind of leaning. So we will watch that one. This one's interesting to me. Coop. They are in the finance, rental, and leasing space, so real estate essentially, very interest rate sensitive. They reported earnings today, which I believe were negative. Let me look. Kind of mixed, I guess. They gapped down. They've been rallied up though since with the rest of the market, but rallied back into resistance. So I believe that should get sold into from kind of those levels and continue lower. We'll watch for that. The bigger picture on this one, you've got an uptrend line, nice clean uptrend. was broken here just ahead of the elections, kind of a false breakdown. But this looks like the real deal. You broke, big rejection. They bought it just ahead of the 200-day, rallied into resistance, and this is, that's resistance. So I'm looking for a rejection here. Earnings is out of the way, so they're free to sell it down, and I do believe it will start to head lower now. Okay. Especially if interest rates continue to rise. That again, that's kind of a key to a lot of these is interest rates need to continue to rise in order for a lot of these stocks, especially something like this that's in the real estate, to sell down. Looks like it's good though. You've got negative divergence, so that's a pretty decent trade setup for lower prices. KRE or regional banks, back below support there at about 64. That was kind of a key level for me. I'm looking for a daily close below 64. We get that, we should start to head lower. If they can manage to pop it back above that 64, you're probably going to continue to backtest this trend line. Again, you've got support, sell signal here, and it's just been backtesting. Okay. Can continue to do that, can continue to backtest. But again, a close below 64, that should act as resistance at that point, and then you can start to work your way lower. And that's the way I'm leaning on that one, down to the 200. So yeah, that one still looks okay, and as of right now, below that 64 mark. So okay, that's all I've got for right now. I'm going to go ahead and get the video out, wrap it up, and I'll catch you guys on the next one.